Hello everyone, welcome to the live stream. We're a little early, but we'll just get everything sorted out here. Hello everyone, welcome to the live. All right, folks, everything's working fine. Welcome to Tuesday and my new chart color. We've gone dark mode. So welcome to the live stream, and if you are here, please let me know that you can hear me okay. Welcome to you. You can type up in the chat room right now. We'll start at the top of the hour in 8 minutes' time. Hi, Neo Rock. Tanil. Lovely to see you, mate. Fridolf from Sweden. Wonderful to have you. Thank you, R. Nice to see you too. And Abdullah, always lovely to have you here, mate. Thanks for visiting. And Light Chaser G. Welcome to you too. Yeah, I've gone dark mode now, Tanil. It's a requirement of one of the other streams I'm running. And actually, it's good for your eyes. It's not good to have the white screens. So ultimately, dark mode's better, but it's also more difficult for me to get used to. So anyway. Excuse me. But I think my eyes will thank me later on. We're looking at the Bitcoin chart right now. Some interesting moves on NATGAS. For the NATGAS traders. It just doesn't look right in dark mode, does it? It doesn't look quite the same as my good old usual charts. Big rejection from the 100-period moving average on this 4-hour chart at Black Bull. We're also short on Brent Crude. We'll talk about that later today. Moving down, rejecting the 200. And Dixie Moab. Let's change this to white. Not Dixie Moab, WTI Moab. So we're trading right back at Moab, and the market structure break, the 200-period moving average, and we're rejecting from there after a big move down. Following the strike on the Iran nuclear facilities, which pushed the price right up into this order block, where we sold, and it's come right back down. We got some profit there, and we've started selling again. So we took profit on that move from the top, right down here at this market structure break, and the 50-day moving average, and the channel center line. Excuse me, we've allowed for a few days of a bounce back up, and we got the double tweezer top here against the 200-period moving average, and the resistance level, and we sold. Over there, actually. So we added some more yesterday on the rally back up to the 200-period moving average and the same level, just poking through. And if you look at this on a shorter term time frame, this will concern quite a few traders. Let's go to the 5-minute. So there's that rush up into the 200 on the day chart, that peak there. And then this one, last night, just went a wee bit higher, poking up through that high, and then collapsing down again. And we got short right at the top there. And we got short right at the top there. Anyway, we'll come to that, folks. Nice to see you, Larry, from Oklahoma. Oklahoma. Are you in Oklahoma City? Mikoizny Mukovic, hi, nice to see you. And Neo Rock James, good day. Just curious, why did you change time from 1 hour before to 30 minutes later? Neo, yeah, so it's a bit of a problem right now because I'm doing another live stream for Ola Prime at that original slot. So starting on Monday, I'll be live on Ola Prime TV from 8:30 a.m. Eastern until 9:30 a.m. Eastern, and then half an hour after that. That's the current plan anyway. I don't know if it's going to work out, but we'll try. Half an hour after that, I'll start my ArcisFX live stream. But I do realize it's not perfect timing, and it's also pretty exhausting, so we're going to have to figure it out. But I'm doing that live stream every weekday over at Ola Prime TV, starting on Monday, and that's 8:30 to 9:30 a.m. Eastern, and then 10 a.m. Eastern, I run my own show here. Good morning from Sarasota, Florida. Nice to see you, Keith. Keith, 1952, which makes you a wee bit older than me, but not a lot, if that's your age. Or maybe it's your father's age, or your mother's. WK Price Farms, good night, good day, nice to see you. And Larry Johnston from Texas border. All the action's happening down your way, Larry. I believe yesterday there were 0 illegal immigrants coming across the borders of the US, the southern borders. And that's a big border. For one person, not even one person to get through is quite remarkable. And that's in your neck of the woods there, Larry. I don't know how it is in your zones. Good day, Ole from Germany. Nice to see you too. Folks, we start in a couple of minutes. So if you've got anything specific you'd like me to talk about, please post it up now. And I'll get to that as soon as I've finished my monologue. I'm not going to be too long today, I hope. And I think I'll start with natural gas. So we're going to start in 1 minute's time. If you've got a question, type it up now and I'll get to it. If you don't have a question, just listen in. So I'm going to start with natural gas and just get these charts ready so that I don't start early. And we'll just get this set up, racked up and ready to go. This is my natural gas chart, the futures, Henry Hub price, offered by Black Bull, my broker. I've been trading with him for a long time. If you'd like to trade with Black Bull, which is an ECM fully regulated in several countries, broker with low spreads, excellent execution, fantastic customer service, and the ability to hedge. So if you'd like all of those in your broker, and as far as they can all be trusted, a pretty reliable one, Black Bull, and there's a link maybe below, I'm not sure. I hope so. All right, folks, let's get going. And this is the natural gas 4-hour chart here at Black Bull, the broker I've just been talking about. And essentially, and I hope I can find it all on this chart because I've changed all my line colors and I've gone dark mode. There's a missing line. That's what I was looking for. So the black lines have gone, is that meant to be red? Yes. So the black lines have vanished because the background's black. So there we go, falling wedge. Now it's a pretty simple pattern. I believe that natural gas is trading in a $3 to $4 range for the foreseeable future. Last year and the previous year before that, we were trading in the $2 to $3 range, and I believe we've moved into a new range. However, I bear no responsibility for making that proclamation because I do think that there is a great deal of danger on this chart of natural gas breaking down much lower. I know this is not a popular view, and many people think that natural gas is going up and not down. And that's also what I think. But I think as well that if this pattern breaks, we're in a lot of trouble if you're a bull on natural gas. We're actually short, so that would be good news for us. But if you're a natural gas bull, you'll be watching the $3 level very, very, very carefully. This is the key level, and it looks like we're trying to approach it. Now, the fact that it's such a key level, we've got a potential head and shoulders pattern on the chart, and we've also got a breakdown of these. See these two red lines that are sloping upwards to the right? That's a channel. It's a bear flag. We had a big move down, bear flag. We broke out through the bottom. Whilst we were breaking out through the bottom of the bear flag, we also then bounced off sharply thereafter through this falling wedge. So kind of we got a conflicting pattern here. We've got a falling wedge, which is now broken to the upside, but we've got this bear flag, which is broken to the downside, and we've got this horrible looking head and shoulders pattern on the chart. So And then the very, very key $3 level, which is right in the middle of your chart. And it deserves, perhaps, a little bit more weight to it. So let's do that. And let's make it purple. Let's keep it red. Right, so that big red line in the middle of your chart is the key level on natural gas. As you can see, just by eyeballing it, you don't need to be a chartist, a CMA, or a CMT to know that. You can see that this line is in previous resistance, several occasions, then support, then support, then support, then support, not quite getting there, not quite getting there, but we've made a fractionally lower low. We're dribbling down, we've bounced back up again, lower than that low, not lower than that one, and there's the $3 level. I think the $3 level is going to be too enticing, and that we're going to have to get down there and retest it and see what happens after that. And as I said, a break and a close below $3 could see us moving down to complete the bear flag pattern. First of all, the length of this move from $4.60 down to $3, that's $1.60 down. So from that could take us down to $4, down to $2.60, $2.40 actually, down here. So about $2.40. Oh, there we go. We've got the line drawn in. Sorry, I'm being dithering. So that red line that I've duplicated from the left, I've drawn down here on the right, and it ends up here at $2.60. That's just based on that bear flag, zig down, bear flag, zig down equal to the first zig. That's based on the bear flag. Based on the head and shoulders pattern, which is now not yet confirmed. It only gets confirmed once we break down below $3. So once again, that's another reason why it's so key. That head and shoulders pattern would take us much below $2.50, down towards $2.20, $2.30. And I don't have the precise measurement for this head and shoulders, but it's certainly much closer to $2 than it is to $3, or $3.50. So that's where we are. It all looks like it could be dangerous, and I think it's all going to come to a head at $3. That's the bottom line here. Let's go back to the 4-hour chart. Are we going to get down to $3? The big thick line that I drew just down here. We're not far from there. We're trading at $3.39 right now. Is it? No. $3.43. And we've just performed a big reversal candle rejecting off that 100-period moving average. We have a reversal hedge in place if this should close above that swing high that we've just tried to, failed to close above there, rejected sharply, and our hedge position is above here. If we close above that level, we'll be hedging our natural gas shorts with an equal long position and waiting to see what happens next, basically. Buying ourselves some time, seeing what happens. Are we going to carry on moving up from here, or are we going to carry on down towards $3? Once we get to $3, if we do move down and we're hedged, we'll take some of the, take some of the short side of that hedge off for profit and then add some more longs on. But that's in time to come. So far, we don't know what's going to happen next. And I really don't like the way this chart's set up in terms of probability, because we don't know if it's going to go up or go down. Is $3 going to attract this price dramatically like I think it might, or not? Or are we just going to bounce here and move up towards 375, which is the key level above us, and then on to 425, 450? I don't know. So the probabilities aren't great. And if you just eyeball this page just like this, as you can right now, the price is literally in the middle of the chart, diddling in the middle of this channel, in the middle of all the moving averages, in the middle of the order blocks, above a resistance, above that failed breakout support level, the falling wedge, the bear flag breakdown, all sorts of things going on. And we're stuck in the middle of all of it, and it's not very clear. You can see by the price action as well on these 4-hour candles, just pretty indecisive. Big doji candles, hanging man, down, up, spike up, back down again. Now we're trying to move up again. 2 star doji candles, almost. A little bit of a weekend gap up. So it's not all that neat or clear. So don't put a lot of money on this one, and just let's see how we go. And I'll probably take some size off, maybe even now, actually, when we finish the stream. I'm at quite a large position, only about 70%, but for me that's fairly large. And I'll probably want to drop that back down to 50% in alignment with where we are on the chart. Now, this is WTI, and I pointed this out earlier. Good morning, Jazz, the Jazz. Just going to say hello to everyone quickly before I carry on. Texas border. Wonderful, Larry. Hope you got your 45 Magnum strapped on you. Good morning, Jazz. Good morning, Peter Lee. Sounds good. Everything's good. All right, let's carry on, folks. So WTI reaching up to the 200-period moving average. That's the purple line here. And the 20-period moving average, the green one, curling down beautifully as we move down. We sold up at that level after having performed a tweezer top, a triple one actually, quite interestingly, well, not quite a triple, certainly a double tweezer top at precisely the 200-period moving average on this day chart on WTI, and then moving down very sharply, not closing above the 20-period moving average once yet in the last, since the 23rd of June. We're now 15th. So 3 weeks we've not closed above the 20, and certainly not above the 200. We haven't closed above the 200 since that big spike up with the Iran attack. So that's where we are. We sold that top, we got out at the bottom, and we're reselling now. So we're now using basically the profits on all of these shorts. I've been short so many times, and until the shorts stop working, I'm going to continue to short WTI oil. And actually, I've deleted some of these arrows already. Obviously, we were shorting at around 120. You'd be nuts if you weren't shorting oil right up here. And we've been shorting ever since. So we got a short there. We also got some shorts on this retracement. And then we got out somewhere near the bottom and we started shorting again. So that's the kind of thing that we're trying to do on this occasion. Move down, little move up, and short again. And that's what we've got going on here. Move down, little move up, although it was very fast and dramatic because of what was going on in the Middle East. So same sort of pattern though. Move down, slow move up, in this case fast though, up to the order block 200-period moving average and rejection zone, and then back down again. So that's WTI, and my target is back down here. The only two longs that we've taken in the last 3 years on WTI have been at $55. We took 2 tranches there. We had a double dip, double bottom, and I think we'll revisit that level again fairly soon. And then when we get there, I'll probably hedge or take some profit off. I've got a really good chunk of, relatively good chunk of size on this one. And so I'll either take all of it off with a hedge, take some profit, hedge some of it, I don't know. But at some point, I think we'll bounce from there, probably back up into this order block, back up to about $60 from 55, maybe even slightly higher, $65, maybe all the way back up to the underside of Moab again, back to here, 66. But then eventually a breakdown below those levels to new lows. I think we'll follow a path that looks something like this, and that this will continue beyond here. So that will carry on. But it'll be zigging and zagging. It's a messy old instrument. It's dirty, it burns dirty, it's smelly, and it's messy in its trading habits as well. And so don't expect clean charts with WTI oil or natural gas for that matter. And as we're talking, natural gas getting a little bit of a bounce. And it's also likely that natural gas and WTI oil will trade in opposite directions. They're inversely correlated quite a lot of the time, not all of the time. And currently we're short on both. So I do half expect that one of them will be wrong. And I think the one that's most likely to be wrong is actually natural gas. So because I'm pretty convinced of the short oil. And as I said, natural gas is trading right in this range in the middle of nowhere, and it's not offering great probabilities. Hi there, Denise, nice to see you. Amit, lovely to see you. Emily Trading, very nice to see you too, as always. And Jamie, lovely to see you too. Richard, great to see you. Peter Lee, everyone in the house, it's great. Let's have some fun. Let's go across to, excuse me, let's go across to stocks, folks. Markets are open, US markets open. Let's have a look at my position. So we're, as you know, if you were in yesterday's live stream, we're long on the NASDAQ, and we're just long on the NASDAQ. That's it. We were previously short. We got hedged. We got out of the hedge. And we got long at, I don't know the exact price, but I think it's in the threes, 22,350. And if you're wondering why I don't know the precise figure that I got in on natural gas to the penny, it's because I trade about 30 different instruments, and I'm a swing trader. So I'm not too worried about whether it's I'm out by on the NASDAQ $1 or a couple of dollars or a few pennies. When I give these numbers, I'm roughly in the ballpark of about 22,300 to 350 where we got long. We're trading now at 22,300 to, I'll find the precise number right now. One of my private group members, just type it up, please. That would be great in the chat. So let's call it 22,300. We're trading at 23,000 now. And this is the NASDAQ. I've got a blob drawn up here, and you know when I draw blobs in there, that either means opportunity or danger, and in this case it's both, because we're long, this might be an area that we want to take profit. It's the channel center line of this long green channel, which has not been defeated apart from that breakdown, very dramatic breakdown, which we didn't see on the S&P or the German 30, but not to this extent. Big breakdown right through the 200 period Bollinger Band at the bottom, smashing through it. But then, here we are, back in a bull market. Unbelievable. Could this year be like the last year? A reluctant bull market where everyone believes that we're probably going down, but the market says, no, we're going up. I don't know. If we are going up, you've got my targets here, and I'm long. If the market's going up, you should be long. If the market's going down, you should be short in general. I think that's kind of idea of what we're doing here. I think that's what we're trying to do, isn't it? Be in the right direction, same direction that the market's moving in. So if we are moving up, and we are currently moving up, and we are long, we should start looking at profit targets. The first one is the channel center line, which I pointed out. We're about 700 points in profit on this trade now, but my target is much bigger. I'm a swing trader. A day trader might be happy with 100, even 50, or 200 points on a day. I aim for swings of around, at the very minimum, 200, but more like 1,000 to 2,000 points. So if I'm looking for 2,000 points on this trade that I got in at 23,000, I'm looking for 25,000-ish. And that takes us up to the top of the channel, right through the channel center line, right through the top 100 period Bollinger Band, and right up to the channel top over there. If we use the angle and gradients that we've been trading within, I could just use these channel lines really to assess how quickly and how fast this market might move in order to get there. And because I've got that channel line drawn at the top already, I can put my cursor there and see that we could get there by the 1st of August. We're now right in the center of July, middle of July, 15th. Not quite, because July has 31 days, so it's slightly below center, but close enough. But by the time we get to the 1st of August, we could well be at 25,000 and some change on the NASDAQ. So be prepared for that eventuality. If you are short, you should be hedging by now, or you should be out of your short. And don't be hanging onto those short bag handles. Don't do it. I'm not saying that this won't go down, but the market is currently moving up. And if you're short, it's going against you. You may be over-leveraged. You may be running out of money. You may be panicking. You may be adding more shorts, averaging down, DCAing into a losing position when you're overstretched. I guarantee at least, I don't know if there are 100 people here in this room right now, guarantee that at least 20 or let's say 10 or 15 or 20 people in this room right now who are in exactly what I've just described, over-leveraged, DCAing in other words, adding to a losing position, either on the NASDAQ or Bitcoin or the S&P or the German 30 or the DAX, the DAX or the Dow or whatever it might be, and you're averaging in. Don't do it. Rather hedge your position, lose out on future possibility. If this moves down, you'll have plenty of time to unhedge your position without getting yourself into a panic and a very bad situation. So just don't do it. Yes, we are at the underside of this over-under red trend line on the S&P. And yes, I'm tempted to short this, but we don't have any confirmation signal for a short just yet. And I'm already long. And I've taken the long because the market's moving up. And so we need to be in the same direction as the market. We got long at about 62.15. We're currently trading at 62.84. So a fair chunk of profit on there. Doesn't look like a lot. This is a day chart. Let me try and reset the scale. So, but yeah, it's a good 2-day move up so far. Look how that trend line is rejecting the price movement. Has done previous to this on 2 occasions. Rejected there, 1 day, 2 days, 3 days, 4 days, 5 days. A week later, rejected again, 1 day, 2 days, 3 days. Shorter time period on this occasion. We're trying again 3 days later. Previous time we tried 5 days later. So we got there, 5 days we tried again, and now 3 days later we're trying again. Can we get through this time? I think we probably can. But if we don't, we'll start to take profit on some of these longs on S&P and the NASDAQ. I have no positions on the German 30. But once again, as I've pointed out many times, I'm looking for this move to occur. Let me go to a day chart. The German 30, unlike the S&P and the NASDAQ, which both broke out of their channels after the Trump tariff announcement, Liberation Day, whereas the German 30 has not done so. I don't know why this channel is so large and so weird. It's not quite accurate. I think my channels got messed about. Oh, there's another channel. There we go. I knew it. It's the problem with these dark charts. You've got to change everything. All the colors go a bit odd. I'm looking for the right color. No, we don't want to use red. Let's just use white. All right. White's not great. Hang on, just bear with me, folks. I want to use a color that's not the same. No, they're all changing. Let's just use white. All right, so we got this channel line. I don't know why there are two channel lines here, but this is my idea, right? So, notice that we haven't traded outside this channel. I'm talking about the inner channel now, the two narrower, the thinner inner channel lines. I don't know why we've got outer channel lines on here. Don't know what happened. Can we get rid of those? What happens? No, the whole thing moves. Very strange. A double channel. Anyway, I've now messed it up as well. But folks, here we go. Look at the inner channel, ignore the outer one. And we've moved up inside this channel quite beautifully. Even on the Trump tariff announcement, we didn't even close beneath the bottom of the channel. So this channel is valid. And every time we've got to the top of the channel, we haven't managed to buy the dips just yet. It was, you needed sort of something of steel to buy that dip, including the NASDAQ and the S&P. I didn't buy those dips. But we have been selling the tops on the rallies back up to the top of the channel. So we've been basically buying the NASDAQ and the S&P most of the time, but we've been selling the German 30 on occasion. So we sold on the rally back up to the channel top. We had the double top all-time high there, which sold off with the Trump tariffs. Luckily, because of that double top, which pre-warned that it might move down, obviously not that dramatic, but the double top put us short here. And we didn't know this was going to come, but it did. And so we got a fantastic trade there, and we did it again. We got short at the channel on the next visit to the channel, and we got out at the 50-period moving average on the dip down there. And we actually reversed and went long there, and then we got out at the 20-period moving average over there. So those were our last three trades, and I have not taken a new trade since then. That's where we got out of the next one, and I've not taken a new trade since. We did actually get long. Sorry, I've missed out one trade. We got long there, got out there. So wonderful trading on the German 30. We've made tons of profit on this, but we're now no longer in a position. I would like this to get up to the channel top, maybe poke through to scare out, grab some liquidity, flush out the tops there, and then come back in. Or if the rest of the market gets a wiggle on, like it seems to be trying to do, we might have to get even higher up to above 25,800. And that's the broader channel top right there, and the top 200-period Bollinger Band. It's also the 78.6% Fibonacci extension level. So I think that's my favorite place to sell if we ever get it. Keep that in mind, put that in your pipe, and stack that pipe up, put the pipe away, and bring it out when we get to this level or that level on the German 30 for a sell. I don't have any longs, but I've got the longs on the NASDAQ and the S&P. I've also got a long on MSTR and one on Tesla. I pointed these out in the last video very clearly. Basically, we've taken most of our profit. I've still got 10% on this one. We got long at the bottom, and we got out at that green line just above that previous recent swing high double top. As it is, we're moving higher, and we may have to sort of get up to kind of the targets on this, really. Pretty simple. A lot of trading is very simple at the moment, very technical. All the charts are making life much easier for technical traders, including MSTR. We've got the 78.6% Fibonacci retracement here, which I think is a key level, and the top 200-period Bollinger Band, which is starting to curl down a wee bit. Both of these are legitimate targets, but an even better one, if you're a serious MSTR strategy bull, we're aiming for a lot higher, and we have to aim for the top. Where has it gone? I've got to find, there it is. This is like a treasure hunt. You've got to find these blobs because they've all gone a weird color. It's kind of fun. Okay, so there we go. There's a blob right at the top there, and there's MSTR. Its chart in all its glory. What a beautiful chart. There's a rising blue trend line. Let's make this white so you can see it better. And there we go. That's beautiful. Rising white, beautiful, clean trend line. We held above it. We broke below it. and we have not revisited that trend line yet. I think we could, and the longer this takes, the further this blob's got to move along up the trend line like this. But at some point, if we keep moving, we'll meet the trend line again, and we'll have to have another chat with it when we get there and decide what happens next. So that's MSTR, and we're also long on Tesla, and we're now also long on, on ARC-K. Hang on. I don't want to mislead you here. I'll come back to that one. I can't remember precisely what we did. I've got a lot of things going on here. I don't want to talk nonsense. My charts are making me ARC-K. Did we go long on ARC-K? Yes, we did. Why? Okay. I'll come back to that one, folks. Can't remember what happened there. But we are long on ARC-K. I don't know. I'm just looking for the arrow, and I've got a short one and a long one from further back. I obviously haven't updated this chart. And then Nvidia, as one more new trade that we've just taken, and we went short on Nvidia. I know what the problem is. I've got the wrong charts. We want the NASDAQ chart. Okay, perfect. Nvidia's gapped up. We're going to have to look at that one now. And then I want to quickly change this chart. Yeah. So let's have a look at Nvidia quickly. Sorry, folks, just getting my charts organized. It is very, very difficult. I'm going to get rid of all these lines, I think. It's just difficult when you're used to one thing and all the colors change. It's so freaky how it changes your perspective on things. So we've got a very small short position on Nvidia at the top 200 period Bollinger Band right there. And I was looking for a dip back down towards the 20 or the 50. And probably this original ascending triangle breakout pattern. I'm going to quickly just fill this in so that you can see this green breakout pattern here. All right, so this was the original breakout. That's a rising ascending triangle, and that's where we got long on the first breakout on Nvidia. We're now short at the top 200 period Bollinger Band after quite a big move up, really. We've got it at sort of 144. We didn't get in there, 144, and we're now at 160, 170. So quite a long way up, big move up, and now we're at the top 200 period Bollinger Band and into new blue sky territory after breaking out of that ascending triangle. Now, I think what's going to happen, or the most likely thing, is that we'll have to get a retracement or recovery just to dip back down to that triangle. This is a very risky and dangerous play because it's shorting a very strong upward long bullish trend. But I have a very tiny position on this, which gives me now the opportunity to average into that. And what I do see here on the daily chart, and I always like to look at these and spot them, look at that shooting, a shooting star really, stuck up above everything else in the middle of nowhere, above the Bollinger Band. If this stays like this today and closes like this today, this could be a very low risk, high profit opportunity to short Nvidia for a move down to the 20 period moving average, but more likely to the top of this rising ascending triangle breakout zone where we got long originally. I'm just going to adjust that a little bit to make it neater, and just to encompass the tops of some of those wicks and candles there. So yeah, so something like here, maybe a dip down to 146 on Nvidia. We're trading at 169 now. Sorry, where are we? 170. Once again, I can't see the labels. Got to fix this. So yeah, so 170. We could get a dip down to mid 140s, back to the top of this ascending triangle. So I'm short on Nvidia, and I do like this pattern here. A gap up and star doji death cross candle at the top of above the Bollinger Band maybe, and if this did gap down tomorrow being Wednesday, and also remember folks, there's quite a lot more news coming out this week which may affect the markets, and there's all sorts of tariff toing and froing going on still, and then of course there's negotiations with Russia, the deadline, 50-day deadline for Russia. All sorts of things hotting up in that area, and of course the ongoing mess in the Middle East and Gaza, Iran, so on. So lots of stuff still going on. These markets are not clear to go and we need to be really careful. But if we do see a gap down on Nvidia the next day, that would actually, and then stay down there, stay below the gap, that would be an abandoned baby reversal, and that's an extremely powerful reversal pattern. So let's see how today closes. We have one small short position from exactly at the 200 period Bollinger Band here, about 168. We're currently trading at 171. Can we get an abandoned baby candle closure today and a gap down and an open lower? I think we could. They don't happen very often, maybe once or twice a year across all the instruments that I trade. We did see that happen on Tesla. This is the second time I've seen this happen in the last 12 months, I would imagine, something like that. The only other occasion I've seen an abandoned baby reversal, a bullish one, in this case that we saw on Tesla, the only other occasion was actually on natural gas. And we had exactly that sort of pattern. Don't know if you remember it. In fact, I made a video on it. It's on YouTube. You can go check out the video. Check out on my channel on the homepage. There's an abandoned baby candle pattern video exactly about that pattern. All right, so that's currencies, and we haven't covered currencies. We've talked about oil. We've talked about gas, natural gas rallying up a bit. We've talked about stocks. And I want to point out something quickly on Bitcoin to you. And I think this is important. If you are trading Bitcoin and you want to be long, or you are long, you want to know what to do, I want to show you something really, really beautiful. This is one of the most beautiful charts I've seen ever, which is quite something to say. Now, what I'm trying to do is fill this background in, make it clearer. Bear with me. Background. There we go. It's a bit harsh, but anyway. Right, so basically we've got a bull run, a bull flag, and then a continuation, a breakout of the bull flag and continuation. What I've done is I've measured the length of the run up, the bull run, into the bull flag, and I've created a purple line, and I've grabbed this line here, and I've simply dragged it across to the end of the bull flag and started at the bottom. This is the correct technical way to do it. Take the length of the bull run, stick it to the bottom of the bull flag prior to exit, which is what I've done there, and then you can sort of estimate or determine the target based on a simple bull flag projection, as any other CMT or CTA would do, and they do this. We've also got an angle, which is great, so we can see how fast it is likely to travel and where it's going to go. So my projection is by the 6th of August, we should get to $135,000 on Bitcoin, and we're currently trading at 116. Look what happened yesterday. We had a big rejection off that 618 fib level and moved back down to this line. This line is not a trend line, it's a gradient line. All I've done is I've copied that gradient. As you can see, that's not a trend line either. It runs through all the candles. It's just running up the center. So is this one. But what it does do, apart from providing the end point and the target, is it provides a gradient for us. And so what we're able to do is to see when we're well above that line, this purple line, we're going a little bit too fast. And when we're well below it, we're going a little bit too slowly. And therefore, if we're above it, we might consider hedging, way above it, for example, like we were yesterday. We might consider hedging, or just not buying anymore, or just waiting, or taking some profit, or whatever you might want to do. You might actually just want to short the market. I don't advise that on Bitcoin at all, but very, very simple. And look where we dropped back down to, just the next Fibonacci level that we broke out through on the previous rally. So we broke up, moved up to the 0.618 fib extension, that one there, rejected with a big bearish daily candle, and fell back just to the gradient line and the 50% retracement level. So what can we do here? Well, the first thing is the gradient line is a kind of baseline. When we bounce back down to the gradient line, it means that we're in a fair price zone and that you might consider buying it for the next rally. Or you might just want to hold on to your position. You may have hedged it over there at the top, in which case you might want to remove that short hedge and take profit on it, and even consider possibly adding some more longs. I've added more longs at this price just now, a few hours ago. So I bought some more on the dip back down to the Fibonacci level at around about 116,000. We are trying to bounce from there now. Remember, this gradient line is not a trend line, it's a gradient line. It may be a concept you've never heard of before. It's simply there to give you a target date, very rough estimate, and it's there to tell you when you're overbought or oversold without using stochastic, RSI, MACD, or any of the other oscillator type indicators. When we're well above the line, we're overbought. When we're well below the line, we're oversold, and it's as simple as that. Ideally, we'd like to see the 20-period moving average, this green line, running along the sort of line that we've got here, roughly following that gradient. When those are in line, the gradient of the previous move, the bull flag, which we've now determined, and the 20-period moving average moving up at the same gradient, we're in a steady, continuous, flowing, beautiful bull trend, and we are in that right now. We're above the 20, we're above the gradient line, we're not overbought, we're not oversold, we're right where we want to be at this moment. And that's all I'm going to say about crypto. My targets you've seen, 140, whatever it was, above us. I think that's a very conservative estimate. We could go a lot further. I think Ethereum and XRP will do the same, but I think they may outperform Bitcoin, or they may not. I don't know. But basically, this is Ethereum, XRP rather, and you can see it's done really well, and Bitcoin dominance is starting to fall down towards its support line and may break through, which could see the altcoins outperform Bitcoin, including XRP and Ethereum, the ones that I'm busy trading. This chart on XRP is very, very classic. I've been trading for almost 30 years, folks. I have not seen so many beautifully proportioned and technically correct charts in my whole life of trading, at least. So in 30 years, I've never seen all of the charts across multiple markets behaving so beautifully. This is a classic channel breakout of XRP. And even apart from just being a classic channel breakout, which is beautiful in itself, it's also performed a beautiful move within the channel by forming a base here, clearing out the hodlers, the long diamondish hands, probably not diamond, more like fake diamond, something ites, whatever those things are called, zirconites or something, or glass. They weren't proper hodlers because they got cleaned out, and then the market did its thing, broke up and carried on. Parabolic exponential move with a lot more to go. If you want to buy back into this and you haven't got long, there are obvious places you can consider buying XRP, and I think you should. Consider this. You can buy XRP for about $2.50, and if you only have a $500 account, I spoke about this in the Olive Prime stream that I was in this morning, in my morning show, me and Paul. We were talking about the price of XRP at $2.50. Do you remember when Bitcoin was $2.50 or 50 cents or $1, and it's now 100 and something thousand? Well, XRP is kind of like that. I'm not saying it's going to 100,000, but what I am saying is that you can buy an awful lot of it for a very low price. If you have a $500 account, which many of you might do, or a $1,000 account, or $5,000 account, or even if you've got a $1 million account, it's a good idea to buy quite a lot of XRP because the downside risk is almost zero. Let's do it this way. If you've got a $1,000 account and you buy, you buy 100 XRP at $2, $2 a piece, whatever, it's $2.50. I'm going to say $2 just to round up. So you've got a $1,000 account, you spend $200 of that buying XRP at $2 a pop, and you have 200 XRP coins. What's the worst thing that could happen to you? XRP could drop to zero, in which case your $200 is gone, but you've still got 800. So it's not really that serious, is it? But if XRP goes to $10 or $20 or $30 or 100 or 1,000 or 10,000, which I don't think I don't have any opinion on that whatsoever. It's a vague, non-zero possibility. If that does happen, then the $200 that you invested now will be worth maybe $20,000 or $200,000. So I like this one just for that reason, and particularly for retail traders with small accounts. Don't risk money you can't afford to lose. For a lot of you, or some of you at least, risking $200 or $300 is more than you should risk, right? You shouldn't risk that $200 or $300, which is going to pay school fees or buy groceries for the baby feed, or to get your car serviced, or to pay your tax bill. So if you need that $200 to do all of that, then you shouldn't be buying XRP or anything else with that money. But if you've got a few $100, a few $1,000, and I'm not saying this as vague advice, I've got skin in the game. I've got a lot of XRP, I promise you, a lot. And it's very cheap. So, and I bought it a pretty long time ago. So you can imagine how much I've got. And it costs almost nothing. And it's kind of a penny stock kind of gamble. I don't think it's nearly as bad as that, but it's that sort of play. You know, you can buy 1,000 penny shares for a penny. You spend $1,000 or 1,000, you know, whatever, and it goes to zero. So what? You know, you may have lost $1,000 or $500, but it could go to $100,000. So just an idea on that. I'm not suggesting you should do that. That's what I'm doing. I never tell people what to do. I always tell you what I'm doing, and you can decide what you want to do with that information as you go along. But don't make your trade decisions based on what you hear from me or anyone else on the internet. We did talk about the dollar index, dollar adding up, other majors coming down. We're long on the pound, long on the Aussie dollar, and we're long on the dollar Swiss franc. So we have two short dollar positions, the pound and the Aussie. So I'm long that, long the pound against the US dollar, long the Aussie against the US dollar, but I'm also long the US dollar against the Swiss franc. This is a hedge against these two shorts. These two shorts aren't doing, two longs rather, aren't doing all that well, but not too bad. So this is what I want to do. Actually, no, that's fine. So this is the pound cable against the US dollar. And we got long at the bottom there at that. I really like this trade, by the way. Move up, rejection, move up, became support twice, strong rejection on that occasion. That's where we got long on the first occasion. We got out there at the top 200 period Bollinger Band, rinse and repeat. When you get to the top 200, you be careful. So we got out of the trade. And then we started rebuying back at the 20 period moving average, which is a good short-term support level. It failed there, and it's also failed to 50, and we backed down at where we started. So yeah, we got a good chunk of profit out of the move up, but we've given at least half of it back on the way down. But I do think we'll find support here, very, very key level. And if we don't bounce here, I'll have to hedge my pound long. We're also long on the Aussie dollar, and we've been long on this one for so long now. And once again, I've got the wrong chart up here. No, let me leave that one there. But now we've got the symmetry. It's trying to get up. Will it collapse back down one more time, maybe right into the center of this order block before bouncing off? I don't know. But generally, I do think that the dollar has to move lower, and it's moving up today only on a retracement. And I think this is just a pullback. We've got a Dixie Moab just above us. Let me change the color of this writing too. So Dixie Moab is going to be tough to break, right? And we've done it once. We broke down below it for the first time in 2 or 3 years, actually 3 years. First time we broke down below there. And on this occasion, we bounced back up inside, up to the underside, the 50 period moving average, perfect rejection from there, back down below Moab. And we are rejecting now off the lower 200 period Bollinger Band, and that's now support. I don't think we're going to get much more than where we are. We're at 90, and this is really important, folks. We're at, why have I got so many decimals on this chart? Unbelievable. Let's get rid of some of them. Trading, symbol, 4 decimals, unrequired. Okay. So, yeah, I don't think we're going to get much more above 99, but we could get all the way back up to 100. I don't think we're going to get above 100. I don't think we're going to get above 99, or not much above 99. We're currently trading at, 98.80, is it? Yeah, no, lower than that, 98.50. So another 50 cents up here maybe, which would mean another 50 pips down on the pound, down on the euro, and then a bounce once this turns around and starts moving back down again. And I think we could see something like this, all right, on the dollar index, which would mean that we see the opposite on the pound and on the euro. And this is the pound, the only one that we're trading. We don't have a euro trade on at the moment, which would mean 50 pips below us, trading at 33.80, so 33.30, maybe a clear out and a false break, and then a move up, something like that. So we might have to clear that low, folks. 50 pips down, and then up again on the pound. That's the kind of idea on that. And that's all based on my idea that the dollar index is slowly, gradually dribbling down. And then we're heading down towards 93 and probably 90 on the dollar index, which means another 10%, further weakness in the dollar from where we are currently trading. And that'll have all sorts of implications across commodities and other asset classes. So it's going to be very, very interesting to watch. We're also long on the dollar Swiss. This is a technical play and a hedge, bouncing off that lower 200-period Bollinger Band. And on the longer-term charts, it's a pretty crucial area. The dollar has just failed against the Swiss franc, one of the big movers. This was the big move down where there was intervention by the Swiss National Bank right here, and we're approaching similar areas. Don't be surprised. There's another one. Don't be surprised if we get something like this, if this dollar Swiss continues to probe lower and lower and lower. The risk is all to the upside on this one, and so the longs shouldn't be too worried about it. But if you're short here, watch out for the intervention. It may be coming. That's the dollar Swiss. We're long, and that's really just a bounce off the bottom Bollinger Band, an idea that the Swiss National Bank, SNB, may intervene. They've done it twice before. Why wouldn't they do it again if their currency gets too strong against the US dollar? No one wants a strong currency like that. All right, and we've talked about energies. I think we're done with that. We're probably about to hedge our natural gas short position. We'll have a look at that shortly. And let's have a look at some of these. Dollar, South African Rand. We're long on that one. Getting into some profit right now. I'm not going to cover all of these in too much detail. US 10-year yield moving up again as TLT treasuries move down. And I promise you, the next time we get back to break even, which means at around about 88 rather, back up to where we were here at the 100-period moving average. I was on the cusp of taking profit there a few days ago. I promised I would, and I didn't. So we've moved back down again. And it's a little bit like that. I think the Swiss franc, I think the risk is all to the upside for a big, sharp, short squeeze on TLT. But until then, it's going to continue to take our overnights and eat away into our profits. Now, let's look at softs and grains. Sugar looking great, fantastic. Just to recap, really, on what we've talked about in previous live streams. We're long on sugar. Love the way that looks. It's looking good. You've seen my targets on that probably, but we'll cover that probably in tomorrow's live stream in a little bit more detail. We don't have any positions on cocoa. we have a position on cocoa. It's from up there. I'm thinking of coffee. We have a short position from about 10,300. We're trading at 8,500 now. I wouldn't mind getting some more size on this, maybe a bounce back up to this channel line. Once again, let me fill in some color here. Yeah, so maybe a bounce back up to the top of the channel line and for another short, or a bit of zigzagging. Yeah, I don't know. I think this is going to carry on dribbling down, really. And if we do get a chance to resell some, I will do that. But I'm more interested in reselling coffee because we don't have a position on this at all. We've been short, repeatedly short. We even tried a long, actually. That didn't work out too well. We got out of that one pretty quickly. Oh, no, that wasn't a long. Sorry. That was an exit of all these shorts. That was a hedge. So I hedged some shorts there, resold here. That was an exit. That was an exit. And that was the final exit on our coffee shorts. Now, I want this to move up a little bit so we can get short again, and we can continue to move down and follow this zigzag. And you can see we've moved. There's another channel here. You can see we've moved actually beyond this channel and the falling channel and the channel center line. So we've got to get back up there, very much like I was talking about Bitcoin with that gradient line. You could treat this channel center line as a gradient line too. And we need to get back up towards the gradient line or even the top of the channel. And I'll be looking to sell coffee there. And probably, I'll give you a price, 332. And that would be my selling zone for coffee. So up to the top of that red arrow at 332, it's also this conglomeration congestion zone. It's also that previous swing low and a little bit of congestion there. So I think that's good. 320, 330, maybe 350, 340, 350, but certainly in the low 300s, below 350, good opportunity. We're currently trading at 296. I'm not going to be buying this. I'm going to be selling it. So that's right up there. But then there's some other opportunities, maybe the channel center line. Just keep an eye on it, and we'll watch to see how this plays out. But so far today, just dripping down a bit. But I'm not prepared to sell at this low level just yet. I'd like to see higher. Orange juice got a big gap up. Of course, this is tariffs on Brazil and other countries. And this moved up by the amount that the tariffs moved up, 10%. Orange juice. So this is a fake move in a sense that it's not a chart move. It's not technical. It's purely macroeconomic. So we've just moved up a level, really. So you can imagine we're still down there. We could move up even further from here. It's as if we're still at the bottom here, and these candles that pushed us up are just a readjustment of the macroeconomics in terms of tariffs, really. So in essence, we're still down at the bottom here in reality, which means we could bounce. This could be a double bottom, except that the double bottom has moved up slightly higher to where the double top is. That doesn't make sense, I know, but it's kind of what it is. So that means that orange juice could carry on moving up. So that's all that. And then corn, coffee, etc. It's all these. Corn bouncing off the bottom there. Cotton looking wonderful, bottom right-hand side. And wheat. Everyone was sounding off the horns this morning in my private group and elsewhere on X when we broke down, tipped down through that bottom of that trend line and looked like we were going down. Maybe that was enough to clear out some stop orders or some ideas, some strategies or some plans. I don't know. But maybe that adjusted the balance of the market in a very small way or in a large way. I don't know. But we did only get back to the bottom of that swing low, which we did a few days ago, and we're trying to bounce off there. So I still like wheat for a big breakout. I like cotton. I like corn. Cocoa and coffee for the shorts. Sugar and sugar for the long. And then soybeans. We don't have a trade on this one just yet. I've drawn a couple of paths, and it looks like we're following the one down so far. And we haven't got any of this yet. So we'll move along into the right-hand side of this chart, and at some point we'll either be up at the top there or down at the bottom here. And when we get there, I'll take a look. But there's nothing to be done on that one right now on soya, and we haven't had a trade on soya probably for about a year now, which is unusual because I'm quite active on soya normally. So it just hasn't been offering anything very exciting. And I think that's all, folks. Just scanning across crypto, looking pretty much like it was. Big move up on natural gas. We're probably going to have to hedge that one. And then, as you can see, oil moving down quite sharply, beautifully. And then all the names that we're in. Actually, NASDAQ's just pulling back a wee bit. So is the S&P. German 30 also pulling down. And Tesla also moving down. So maybe a little bit of weakness today in the markets. By the way, the CPI numbers came out and is all quite sort of soft and fuzzy, really. And inflation numbers, core CPI and CPI, were above the previous recording, but below expectations. So kind of a damp squib, really. Better than expectations, but worse than before. It doesn't really tell you a lot, does it? And not big moves, not huge changes, 0.1%. Okay, folks, I hope you enjoyed that live stream. And if you haven't already subscribed and pressed the like button, I'd like you to do that right now before we continue. That would be very kind of you. Just be kind, be nice. Press the like button, press the subscribe button. And I do this for you for free, and that's all I ask in return. Let's carry on. What's your opinion? Are we fundamentally short or long in natural gas? Like Ole, as I said, I don't really know. I think we're in betwixt and between. I said to my private group this morning that we really are. This is kind of the definition of diddling in the middle, or we were, until this big move up in the last 4 hours. But we're still not above that level, and anything can happen. It does look bullish, and oil is moving down, so we're in good profit on oil. Got a good chunk on that one, big position. And as oil moves down, it's more likely than not to push natural gas up, and they will trade quite a lot of the time in opposite directions. So that's the way it is. We've got to give one, and we've got to sacrifice one in this case, maybe. Notice the 200 period moving average above us on natural gas. And maybe, just with a bit of luck, who knows, both of these will move down today and into the rest of this week. But natural gas does look quite perky and quite strong. But we are really just in the middle of nowhere on the natural gas chart, above support and below resistance, two major chart patterns, conflicting chart patterns, potential head and shoulders, a bullish outlook for the rest of the year, but the chart doesn't look like it's bullish. So not great. Not my favorite play, and it's been very, very choppy and messy, as you know, over the last couple of days. All right, let's roll further. Inverse head and shoulders, James says, and we're moving up. I don't know what you're referring to there, James. From the bottom. Moving up from the bottom. Hi, Amit and Deniz. I think I've greeted some of you already. I'm also seeing $3 on NatGas. The chart to trade has been very difficult. How are you, James? Thank you, Daniel. Appreciate your greeting. I'm fine, thanks. I'm doing really well. It's great. I'm doing fantastically well. I hope you are too. Yeah, and it has been difficult. I mean, natural gas goes into these funky moods sometimes where it kind of loses its personality and its appeal, and it becomes just a messy old, miserable, boring, and not boring, I suppose. It's never boring, but just petulant, like a petulant child. That's what it is doing right now. It happens about once per contract. Dark charts hurt your brain. Yeah, mine too, Fariba. I don't know why, but unfortunately I don't have a choice in it. I've taken on a contract with Ola Prime TV, and because I'm the employee, I suppose, I'm beholden to their requirements. But I would not put dark charts on my screen, as you probably know. I've never had dark charts, and I don't even know how to make sense of them. I can't read them properly. Good day, Brian. Nice to see you, mate. Let's hear what Brian Perry has got to say. Brian and Bill from Energy Rogue, and I'm going to read it out to you. My take on crude. It's dropping into the 50s before a long-term fundamental view uptrend. I think I agree with you, Brian. The question is whether we do dip to the 50s or skip that bit and head up. Versus US dollar, we should be headed up. Yeah, I think that's it, really, Brian. We should get to 55 or 50. 50, maybe a fraction below that, but maybe we won't. Maybe, that's a good idea, and maybe it's going there, maybe it isn't, but I think that's more likely. And basically, when you're trading, you've got to set a line. You just got to pick a direction. It's not that difficult. It's either going to go up or it's going to go down. This is oil. And so because of my plays over the last number of years, because they've been successful, I'm not going to change my approach. Why would you? So every time it rallies up to the 200 or the order block, one of the two, or the trend line or the channel line top, I sell it. And we did that on this occasion too. In fact, I'm going to show you the channel line because it's gone black as well. So annoying. Let's make these white. Bear with me one sec. All right. Oh, that's a mess. All right. So you can see the long channel there, folks. And once again, it's drawn an exterior line, and I don't know why. Very strange. Oh, I see. That's why. All right. Anyway, so there's the channel, and this is the channel we've been trading in since 2023, and we've sold at the top of the channel, or the order block, or the 200 period moving average, which is the purple line in the middle here. On this occasion, we sold at the 200 and the order block, looking for a move simply just back down to the bottom of the channel, like it has done every other time. Every time we've tested the top, we've moved down to at least the channel center line, and on that last occasion, we got to the top, we moved below the channel center line to the channel bottom. So that channel center line has now been defeated considerably. So I think we could, now that that sort of zone has been opened up as a frequent trading zone or volume zone or area of interest, I think we need to revisit it. And that means we've got to get back down to the channel bottom again. But then I think you're right, Brian. I think we'll see a significant bounce off this zone, channel bottom. By the time we get there, we could be down at 53, 54 below this level as the channel slopes down. And this is the kind of thing I'm thinking. I might be a little bit aggressive on this. I think you may be thinking that, we'll eventually sort of bounce off that area and move up sharply. And that could be the case. All of these channels eventually do break, of course, and this one's been going along for a little bit too long. It's too neat, too long, and it's sloping downwards. So it's not a bull channel. It's not a bear channel. It's actually a bull channel. So a channel that's sloping downwards whilst we're trading inside the channel, it's a bear market strategy. We're selling the top of the channel. But when this channel breaks, which it will, it's most likely to break through the top and not through the bottom, and to stay broken through the top and not through the bottom, which means that WTI oil should eventually get up through there and stay and probably move higher and maybe back up to this high at about 80, 90, 93, and maybe all the way back up. Who knows what geopolitics and economics lie ahead of us. So that's the general idea. And I appreciate that, Brian, because it's pretty similar to your approach, your idea is very, very similar to what I've got in mind. And it's always nice to have confirmation from one of the energy expert bros, you and Bill. So thank you, Brian. Appreciate that. At a minimum, XRP becomes a good hedge. Yeah, you're right. BTC dominance, K seems to be dribbling away. And I see the alts are, we seem to be at a trend line break zone on BTC dominance. So if BTC dominance does break through that trend line and down, we then should see the likes of XRP, Ethereum, and the whole host of other coins perhaps doing a little bit better than Bitcoin. I'm just watching it now as we're talking, and Bitcoin has just dipped down below 116,000, scaring a lot of people. I can see X lighting up as I'm talking. I'm not worried about it, by the way. At a minimum, XRP is a good hedge. Bitcoin dominance, so maybe Bitcoin dominance is going to fail a little bit at a trend line, and we'll see the alts catch up. Good day, John. Your test is fine. I see you there. Thank you very much. And then Neo Rock. Silver has fallen to my target of 37.80. Am I long? I'm not long on silver yet. And also a view on the euro. Okay, Neo, I don't have a position on silver, and I will get into silver if we get the chance. And because I'm watching you, this is not my buy zone for silver. It's only dipped down a tiny bit. I'll be looking for a dip down to about 37 and possibly slightly lower. And ideally, following this green line down here, which I pointed out in the last live stream, I think we could actually dip below that breakout level down to the order block, something like this. So with that in mind, I don't have a position on that yet. I'm looking to buy silver. And with that in mind, we need to look at the gold chart because we're long on gold. And we've been short on gold, as you might know. All my short arrows are here. And eventually we've taken profit on bits and pieces of these shorts. And I've now given up on the shorts because it's not going down. I do think that we should get down lower. There are some black lines here, trend lines, which are hidden because they're dark. I've lost them now. Anyway, I do think we could get further down. My ideal place to buy gold actually is at 31.20 at this previous swing low and swing high, and it's a Fibonacci retracement level as well. But I don't know if we're going to get that. It's either 31.20 or the 200 period moving average closer to $3,000. Those are the two levels that I think are the most likely to be reached on the downside, if we do get to the downside. And so far, it looks like we're holding up. We broke out through the trend line. We've got a bull flag here. Move up, bull flag. Let's go to the 4 hour. Let's go to the 1 hour chart. You'll be able to see it much more easily. So there's the breakout. There's the trend line. Breakout of the trend line. Bull flag after the bull move up. Bull flag. Breakout of the bull flag. And now we've got an order block below us here on gold. So I like it. On the hour chart, it's looking pretty strong, pretty firm. Nice move up, holding there. Big spike low in the last couple of hours. And I'm long on gold. We don't have a position on silver. But I will be buying silver at some point, if I can. John Lanny, nice to see you. New subscriber, and I feel like a mosquito in a nudist camp. Wow, okay. Not knowing where to start. Well, I'd start at the toes, John, and work your way up, and then maybe skip the middle part, and then start up again, maybe just above the chest area, towards neckline. John, if you're interested in trading, this is a great place to be, and this is what we do. We trade the markets. But you're not going to learn an awful lot probably from just watching my YouTube videos. And I do have a private trading group that you can join at a discount. And there's a link below for what's called the Trader's Survival Kit. In the Trader's Survival Kit, there are all sorts of goodies for you for free, including my music playlist, my G7 trading system ebook, a video or two, and another trading system ebook. And it's all there for you for free. You don't have to pay for it at all. All I require from you is for you to subscribe in order so I can know where to send it. If you don't tell me who you are, I can't send it to you. But in there, there's also a discount on of 20%, or it could be 30%. It varies depending on my marketing team, of 20% on all of my trading courses and my private group in perpetuity. So if you sign up with my private group using the discount code in the Trader's Survival Kit, and the link for that is below this video, then you'll get 20% off every single month if you join up as a private member. So it's this month, next month, the following month, every month. And I think that's worth quite a lot. So there's a link below, Trader's Survival Kit. Sign up there, and I'll send you all the stuff, including the discount codes, and you can join up. That is, of course, if you want to learn how to trade. If you're not interested in trading, you're just here for a chat, that's fine as well. You're quite welcome. All right, folks, and I think that's the end. Thank you, Sarah. Amazing session, you say. Thank you very much, and thank you for being here. I appreciate it so much. And gold, we've just talked about gold, Powell. You obviously came in late. We literally just finished talking about gold. And MD, could I please check ETH? Yeah, let's have a quick look at ETH while you're here and while we're all here. And this is Ethereum. I like it very much. I'm long on Ethereum. I've got quite a lot on Ethereum, not as much as Bitcoin and not as much as XRP. This is my third choice, and I only have three choices. I have Bitcoin, XRP, and Ethereum. I'm a Bitcoin maximalist, and most of my holdings are in Bitcoin, and I also invest in Bitcoin. So I'm not just a trader. I have basically 80% of my investment is in Bitcoin, and the rest is in property. So I'm all in on this game, but I've got some Ethereum. It's not my main play, but I do like it. Pretty simple, very much like XRP and Bitcoin. Actually, this one's even neater because we've got a much neater pattern. Let me draw it in for you. And I'm just going to draw it roughly, all right, like that. So we've just got this parallel channel, big move up, bull flag, and the next move up, like Bitcoin, like XRP. XRP broke out of a bull flag. This is a rectangle, same sort of thing. There's the clear out through the bottom, just like XRP. XRP had to clear out. Whenever you get a flat bottom like this, it's always tempting for the market just to clear it out. It's taking out the trash. All of these weak hands sat along the bottom who have, like, you're talking Ethereum, like, $10 stop losses just below the line, maxed to the hilt, leveraged at 20 to 1 with a $10 stop loss, buying the dip down to the bottom of the channel bottom. Weak hands, weak as you know what. And those weak hands, the moment you do that, get immediately liquidated, and most of them, their accounts too. So that's the account liquidation, has to happen every time, and then we move up and we break out. Much like Bitcoin, we can do exactly the same thing to set a target. And remember, this is the most conservative target, and we could set much more aggressive targets, which I have done as well. But let's just keep sane here for the moment. And I'm just going to draw that line up there, up through there. Stop it from it being extended. All right, there's the bull run. There's the bull flag in between the parallels. And I'm going to copy this one and drag it across to the end. I didn't say change color. I deleted it. Did I delete it? So annoying. Right, let's do it again. So there's the bull move, the bull run, up to the bull flag. So it goes up, then it goes sideways, perfectly parallel. And I'm going to copy this, clone it, and stick it to the bottom, not of that low there, because that's not a real move, right? That's the clear out move. I'm going to do it from the bottom of the channel. That move there doesn't deserve to get the bottom of the bull flag extension because it's not a real move. It's a clean out move. It's a take out the trash move. It's an account destroying move to release liquidity for those who are more serious about trading Ethereum. So now we can set a new target. Now that the weak hands have been destroyed, cleaned out, we can set a target, and I'm just going to draw another horizontal line at the top of this line here. So now we have an angle and we have a target. This is not a trend line. This is a gradient line. It's a very big difference. So we know that when we're above this line, we're a little bit too fast. When we're below this line, we're a little bit too slow. Very, very simple. And even a child could do this. We have a target, 3,800, which just so happens to be the previous high, very roughly. So that's Ethereum. It can't get more simple than this. And I'm absolutely astounded at the beautiful nature of the technical charts that we presented with over the last number of months. I've literally, after 30 years of trading, I've never seen anything like it. All of them, even the crypto charts, Bitcoin, Ethereum, XRP, all the metals charts, all the stock charts, the currency, everything is looking so beautiful, so technical. Now's the time to make hay while the sun shines. You've got the chance, you've got the opportunity. Get some XRP if you want to make a start. Just buy one for $3. It might be worth $1,000 in a month. You don't know. But whatever, you know. So all of these charts are looking great. I'm very excited, and everything's looking pretty profitable. I don't like this big dip down in Bitcoin right this minute. It's a little bit too aggressive and too sharp. But once again, we can just use that purple line. If you're panicking, don't. That's the angle, okay? We're not going to get steeper than that unless we go parabolic. That was the angle approaching this bull flag, and that's the angle leaving it so far. The angle hasn't changed. When we're above it, we're too fast. Below it, we're too slow. Right now, we're dead on the line, and it's perfect. Don't worry about it. It's a normal pullback, even though we've got a doji shooting star candle. We've just pulled back down to the gradient line. Have a great trading day, folks. It's been wonderful talking to you again. Please like and subscribe. I put a lot of effort into these streams because I want you to benefit from them, and that's my goal. So I think the best way for you to support the channel and to basically improve what we're producing here, make it better, we get more enthusiastic, more members, more inclusion, and more exciting stuff. And there are all kinds of plans that I've got in place, which I'm a bit excited about. And in order to do that, we need new subscribers, and we need to grow the channel. So your little subscribe and like will help a great deal. It makes a big difference. Thanks very much, everyone. Have a great trading day. Watch out for those Bitcoin plays. Look to buy the dips on all the cryptos, I think. I think it looks scary right now because it's dipping back fast. I've already squirreled away some of these funds. I've hedged, I've cashed in, I've added some more now, and I think we're going a long way further on Bitcoin. Someone pointed out, I'm going to finish with this. This looks very much like the last top on Bitcoin. And let's go back to it. This previous all-time high double top. Look at what happened. This is a day chart. Look at what happened at this top, not the last occasion, although we did have a one up, one down candle reversal. This is going back to 2024, not very long ago. One up, one down candle reversal. Look what happened on the next occasion at that double top, big doji candle. All right. So that was a concern. And then on the previous run up into the low 60s and 70s, let's have a look at the top. Doesn't look like what we've got now. This is a clear reversal candle. This is a doji tweezer engulfing candle top, and that's what forced it down, and that's when we started moving down dramatically. Now, it doesn't look like anything like that today. It looks completely different. We've got a shooting star candle. It's not an engulfing. It's not any of the candles that we saw in the previous charts. It's a shooting star. Today is not closed. Don't worry about today's candle too much. It's very red, very big, very fat, as they call it, a fat red candle moving down. But look where it's got to, only to the gradient line. I'm not worried about it at all. We'll have to wait to see how today plays off, how it ends off. And I wouldn't be surprised if we ended up well above the gradient line, or at least on it by the end of play today. And then the day after that, now that we've pulled back down to the gradient, we're not going too fast anymore. And once we've corrected that, which we've done now already, I think we could form a base over a number of hours or even days and then carry on moving up. All right, folks, I'll see you in the next stream. That will be tomorrow. And I did say I'll be doing the Ola TV live streams morning show starting today, but we ran a trial run again today because some of the presenters that run the later shows, the Forex and the stocks trading shows later in the day, are having some problems with the tech. Not unusual. It's quite complicated technology that they're using. There's a green room you've got to get into, get all your mics sorted out and get it all set up. So it's a little bit difficult for some people. So we're not going live today or tomorrow, probably on Monday. But if it happens before then, I'll send you the links, let you know when that is. And that's Ola Prime TV, starting soon. And I'll be doing the morning show, co-hosting with Paul. I'll see you soon, folks. Have a great one. And just be careful. We could see some violent moves this week. Just got to find the off button here now. Cheerio, Jazz. Daniel.